What if I told you that there are algorithms on Wall Street right now actively gambling on your unhappiness? It sounds like science fiction, but it's happening today. For decades, Wall Street bet on oil, real estate, and tech. But now, they've unlocked a terrifying new asset class: your emotional decline. Right now, elite hedge funds are using artificial intelligence to track global sadness, anxiety, and depression, and they are making billions of dollars betting that humanity will feel worse tomorrow than it does today. Today, we are going to expose the dark world of emotional hedge funds. You probably think your mood is just a personal feeling, but to a quantitative trader, your bad day is a high-yield investment opportunity. We will show you how they monetize your despair, but the most disturbing part isn't how they track your misery. It's how they are financially incentivized to make sure you never get happy. To understand how a hedge fund bets against happiness, you first need to understand a financial concept called short selling. Imagine borrowing a car worth $50,000, selling it immediately, and hoping the engine blows up so you can buy it back from a junkyard for $5,000 and keep the profit. When you short a stock, you make money only when things get worse. Now, apply that exact same logic to human emotions. Marcus. Marcus is a quantitative fund manager in New York. Marcus doesn't read company financial reports anymore. Instead, his AI supercomputers analyze billions of social media posts, search engine queries, and even the tone of voice in public customer service calls. His AI looks for specific words: exhausted, hopeless, can't sleep, giving up. When those words spike in a specific city or demographic, Marcus's algorithm executes a trade within milliseconds. What does it buy? It buys shares in pharmaceutical companies selling antidepressants. It buys stock in alcohol brands, fast food chains, and mobile gambling apps. And simultaneously, it shorts or bets against gyms, outdoor recreation companies, and healthy lifestyle brands. Marcus's fund just made a 40% return this quarter. Not because the economy grew, but because society got sadder. But tracking what you say online is outdated. What hedge funds are doing now to predict your emotional breakdown is far more invasive. Think about the smart devices you wear every day. Your fitness tracker monitors your sleep quality and heart rate variability. Your phone tracks how many hours you spend alone in your bedroom without moving. You think this data is just sitting on your phone to help you live healthier. Wrong. Anonymized biometric data is packaged by data brokers and sold directly to institutional investors for billions of dollars. Let's look at the financial architecture of a mental breakdown. When an AI algorithm sees that 500,000 people in a specific region are suddenly sleeping 2 hours less per night, and their physical movement has dropped by 30%, the algorithm doesn't see a mental health crisis. It sees an economic pattern. The system knows that within 14 days of poor sleep and isolation, consumer spending shifts drastically. People stop buying long-term investments or travel tickets. Instead, they start impulse buying instant gratification products, junk food, streaming subscriptions, and digital entertainment. So, the emotional hedge fund fronts the market. They buy the exact stocks you are about to impulse buy out of depression days before you even realize you are depressed. They are literally skimming profits off the chemical imbalance in your brain. But here is where the story turns from unethical to downright dangerous. Because once a hedge fund makes billions betting on human misery, they can't afford to let you get happy. In finance, there is a golden rule. You get what you incentivize. If a multi-billion-dollar fund holds a massive short position against human well-being, their entire business model relies on society staying miserable. And who owns the biggest tech platforms, the media outlets, and the news algorithms? the exact same institutional investors who run these funds. This creates a terrifying closed loop. Step 1, the fund bets billions that anxiety will rise. Step 2, the algorithmic media platforms they invest in push doom scrolling, negative news, and polarizing content to drive up your anxiety. Step 3, you feel overwhelmed, isolated, and hopeless. Step 4, the fund cashes out its short bets for record profits. It is an artificial ecosystem designed to mine your emotional despair, convert it into digital currency, and deposit it into an offshore bank account. You aren't just losing your happiness to chance, you are losing it to an algorithm designed to extract it. Emotional hedge funds only win when you lose control of your own mind. When you allow digital screens to dictate your mood, when you isolate yourself, and when you seek comfort in algorithmic instant gratification, you are paying a voluntary tax to Wall Street. So, what is the ultimate financial rebellion against an emotional hedge fund? It isn't buying different stocks. It isn't trying to beat them at their own quantitative game. It is taking care of your mental health. It is going outside, building real human connections, and refusing to let an algorithm monetize your bad days. Because in a financial system that is literally betting billions of dollars on your destruction, your happiness, your peace of mind, and your hope are the most rebellious, untaxable assets on Earth. If you want to understand the dark psychology behind the rest of the economy, make sure you're subscribed to Finance Prep Academy. We don't just tell you what's happening, we show you who is profiting from it.